Well, Reliance is all set to report their numbers. If you take a look at the stock performance, the stock has been absolutely flat in the last 12 months. In fact, the stock is down 16% below its 52-week highs, perhaps because of the lack of any tariff hikes in the last 1 year in the telecom industry. Now, let's take a look at the estimates for Reliance Industries. This time, it's expected to be a mixed bag. There's a quarter-on-quarter improvement in the refining margins, and that will offset the weaker petchem business for Reliance Industries. In fact, the improvement in domestic gas prices is also something that will offset the weaker petchem business. Singapore gross refining margins, just to put it on board, have contracted further to about $6.2 a barrel in the quarter gone by, and that is led by a decline that we've seen in gasoline as well as diesel cracks. Now, the strength in refining will offset the weakness in petchem, and that will lead to the EBITDA growth on a consolidated basis being quite muted. For Reliance Jio as well, we're expecting a bit of a slowdown in terms of the subscriber additions. Retail could also see a bit of a slowdown. So let's get you some numbers. For the Jio business, we're expecting just a 6 million addition to the subscribers compared to 7.8 million that they added last quarter. If you look at the estimates in terms of average revenue per user as well, hardly any growth, about a 1.3% growth compared to last quarter at 179.5 rupees. Now let's move on to the retail business. There's definitely some moderation that we're seeing in underlying growth because of the slowdown in the middle income discretionary consumption, and that will hit earnings. In terms of a growth for the retail business, we're going with a 12% quarter-on-quarter growth on the top line at about 46,600 crores. Let's put all of this together. For the consolidated business for Reliance, expect no growth on the top line. 2.31 lakh crores is what we're looking at, very similar to what we saw last quarter. On the EBITDA, a single-digit growth of around 7% is what we're looking at 33,430 odd crores, and the profits will see a growth of around 15 odd percent. Now, a couple of key monitorables. There is a big expense of or investment of 75,000 crores that Reliance has announced in the new energy business. Further clarity on that is something that the street will closely watch out for in this quarter's earnings. Any growth in terms of the retail store addition will also be keenly watched. But I think more importantly, any pricing action in telecom. As I said, there's been no tariff hike since December of 2021, and hence that will be closely awaited. All in all, the stock has been quiet in the last 12 months and is still down about 16% from its 52-week high.
Expect a steady quarter from Reliance Jio this time, a revenue growth of 2.8% on a quarter-on-quarter basis. This will be driven by a price increase of 1.3% and some growth in the subscriber addition. Subscriber growth seen at 1.4, 1.5%. Now, talking about the subscriber addition, it should be an increase of about 6 million on a quarter-on-quarter basis. In the month of October, the company had added 1.4 million subscribers. Expect a pickup in the subscriber addition, totally coming up to about 6 million in the current quarter. But this will be lower compared to what we had seen in the prior quarter at 7.7 million, and the key reason for that is muted smartphone shipments. Pricing or the average revenue per user is also expected to increase and now almost coming to that 180 rupee mark. In fact, the ARPU for Reliance Jio has been steadily going up. EBITDA margins are likely to expand to 52.2%. That's the CNBC-TV18 poll, driven by a benefit of reduction in the spectrum usage charge. Profits, according to the poll, should be up 2.2%. Two key things to watch. One, the tariff increase has been delayed compared to market expectation, and of course, an IPO as well.
But for the retail business, where Reliance has all its focus on as far as growth is concerned, and the street likes it because of the valuations, we're expecting a good quarter coming in. And there are three reasons for that. One is the festive demand. Secondly, a couple of thousands of stores that they've added over the last 4 quarters or so, and the multiple business tie-ups that the company has announced as well. So as far as numbers are concerned, on a quarter-on-quarter basis, we're expecting an 8.3% jump in the company's top line, closer to 70,000 crores from an already high base of 65,000 crores in terms of revenues. The EBITDA also grows in step, about 5% in terms of a jump quarter-on-quarter, closer to 4650 odd crores mark. The margins largely stable, a mild dip of 20 basis points is what we expect, and that's par for the course as we've seen with other retailers as well. Year on year as well, these numbers, 21-22% jump in the company's EBITDA as well as revenue respectively. And now to the big triggers for the future. They've announced their FMCG brand Independence that they launched in the second quarter itself, and a multitude of tie-ups that they announced as well. Socio and Campa Cola acquisition, Metro AG's India business, and the announcement of acquiring Lotus Chocolate to enter into different categories as well. So all eyes will be on where this goes in the future. But for now, the third quarter likely to be good.
Well, Alta Chemicals business in Q3 for Reliance Industries is expected to see an improvement. It will be driven on a low base, and EBITDA is expected to see an increase of 12% on a sequential basis, majorly led by their refining business. So this time around, refining margins are expected to see an increase of 14% on a sequential basis to come in at $16 per barrel, and this will be led by improvement in cracks. So middle distillates yields and also naphtha cracks, they have grown on a quarter-on-quarter basis globally as well. Low windfall tax is something that will aid earnings as well, because that is something that put pressure on earnings in the quarter gone by. Moving on, if we talk about the petchem business, that was weak last quarter, and weakness is expected to continue for two reasons. One, because there are capacity additions in China, and also globally there is a demand headwind as far as petchem segment is concerned. But if we look at the EBITDA, which declines on a sequential basis in the quarter gone by, this is expected to see an improvement. But let's talk about the petchem segment, because it did see a decline in the last quarter, expected to continue. But JP Morgan says that margins have likely bottomed out during this quarter, and they are expected to improve from Q4. So that is a positive commentary coming in. Moving on to their oil and gas business, the exploration and production business, that is where higher gas prices will aid earnings for this segment this time around and will drive EBITDA growth, which is expected to grow 46% on a sequential basis for the company because, of course, of higher gas prices. So this segment has been firing on all cylinders in last couple of quarters, and that is something which is expected to continue this time around as well. So overall, O2C and oil and gas, both of them expected to do well in this quarter.